To the second part of the GST marathon. In the first part, we had done the introduction for GST as well as the first 8 sections. Out of that, section 7 and 8 has been repeatedly asked. And in today's session as well, I will be taking you through some important sections which repeatedly come in the exams. Okay, and we are going in order so that the GST law is perfected by you. Now, before I start, let me tell you that I go through the past exam questions and I ensure that I cover everything. Now, before I start, I would want you to tell me in the chat box if I'm audible and visible or no. So I will quickly begin. So am I audible and visible, yes or no? So am I audible and visible, everyone? I'll be taking you through important sections. If you're sitting with me, you will see that you have a mastery over the entire GST laws. Out of your 40 marks, you will be easily able to score. Divya, great to have you. Great. And just one request to all of you all, please do share this video and inform all your friends also about our lectures. Many students are looking for English lectures. Many students are looking for physical classes, offline classes in Mumbai. So please spread out the word as well. Okay. Devika, great to have you. Any more persons who want to put their names, I'll be glad to wish all of you all, because now when I start, then I directly complete the marathon. Go ahead. Great. So let's begin with the marathon. Yep. So I believe you must have sat for the yesterday's marathon or the part 1 marathon. In the part 1 marathon, I had covered till section 8. Today I will be doing your sums which come in the exam as well. Okay. And don't worry, one separate lecture I will have for only solving the sums of GST that come in the exam. I have done that before, and exam questions of sums only come from there, because I know I have written a book on GST. I know exactly from which section they will be asking the sums, and every time, even in June 2025, they are the same sums that they are asking. So I will be doing a separate video for the sums where only the sums of the section of the act will be covered, GST. Now let's begin. Hi. So this is the second part of the GST marathon. In the earlier part, we had completed till section 8, and we will be continuing now from the section number 9. Section 9 is the most important section of the GST law, which gives the power to the act, to the authorities, to the government to charge GST. So that is called as a charging section. Sir, what do you mean by a charging section? A charging section will be written, in the charging section they will be written that when XYZ thing happens, XYZ act, XYZ tax will be levied, and it can be levied at max XYZ tax rate. Now my question to you, and I believe everyone normally gets it wrong, what is the maximum amount of GST that the government can levy on goods and services? Then I will take you through. So the charging section will answer that, and I believe you will be shocked at what rate government has kept in their power to levy the GST highest rate. Okay. Now, section number 1 has 5, section number 9 has 5 subsections. Okay, all I will be doing in one go, so it will be easy for you. Okay. So the very first one is your section 9, subsection 1. It is the actual charging section, which says that when the tax will be levied. So we are studying CGST Act. So CGST is levied whenever there is a sale within the state. So CGST tax will be levied whenever goods or services are sold within the state. Now in this, they further go to say what will be the maximum rate of tax. The max GST rate. Max GST rate. Can anyone tell me what is the GST rate given by the government? That is the maximum that they can charge. So when you read your section 9, okay, what are we reading? We are reading your section 9, subsection 1. What are they saying? That the CGST Act will be levied on all intrastate supplies. So whenever supply of goods or services there, it will be charged. at a rate not exceeding 20%. So the maximum rate of GST they can charge is 40%. Sir, 20% you said. So government in SGST also have said the same thing. So 20% here. So government can charge 20% CGST plus 20% SGST. Total 40% is the maximum GST rate. Is the max GST rate that can be charged by the government. Moving forward, your section number 9 subsection 2. First one tells about the charging section and the rate. So here the rate of GST will be given and the charge, when it will be charged on intrastate supply of goods and services. Very simple. Moving forward, section number 9 subsection 2 talks about non-GST goods. Many students don't know what it is called. It is called as non-GST goods. Sir, what do you mean by non-GST goods? On these goods, GST is not levied. And you will see it is all related to fuel related things. So whether you have a diesel car or you have a petrol car or you are using natural gas, everything will be covered. So what are you saying? Yes. See this, everything is covered. So whether you're using in your car diesel or petrol or natural gas and even planes, turbine fuels and crude oil, all this is covered. On this, GST is not levied. It will be levied from the date government notifies. Sir, very simple, very easy. Then comes two important points and subsections which you need to know. That is section 9 subsection 3 and 9 subsection 4. And 9 subsection 5 is also very interesting. This is called as GST on e-commerce on services. So e-commerce operators for services. Let's see. So whenever e-commerce operator of service is there, okay, 9 subsection 5 will be applicable. E-commerce for services. Sir, can you give me example of e-commerce? I'm asking you, give me an example which will fall under 9 subsection 5, where it's a online operator, that's an e-commerce portal, right, where services will be provided. Quickly, e-commerce operator where services will be provided. So obviously when you go to look at Uber, Rapido, what are they? They are giving you services. When you look at any online hotel booking things, what do they give you? Service. So when you have Trivago, you have Make My Trip, okay, these flight booking. So these are all apps which provide services. Very simple. 9.5 is the provision that is covered. That we will see when we come to subsection 3 and subsection 4. This talks about RCM. What do they talk about? Both of them talk about reverse charge mechanism. In reverse charge mechanism, certain notified supplies are given, where certain notified goods will be given and some notified services will be given. On that, tax will be charged on reverse manner. Reverse manner means what? Supplier will not charge. The recipient only has to pay GST to the government. What it means, I will explain. Again, I'll repeat. Always, I don't know whether you know this, that charge under GST, okay, could be of two kinds. One is forward charge and the other one is called as a reverse charge. Sir, what do you mean by forward charge? Forward charge are all cases. In all cases, forward charge, in normal cases, forward charge will be done. Means what? Who goes and pays the tax to the government? Supplier or recipient? So McDonald's will go and pay the tax to the government, or the person eating the burger will go and pay? If you go for a haircut and the salon will collect the GST and pay to the government, or the person who's cutting the hair will go, whose hair is being cut? When you're going for spa services, when you're paying, enrolling in any classes where GST is in the invoice. So obviously the supplier of services is the duty to pay. So the supplier is liable to pay GST to government. If he fails, penalty will be on him. Sir, very simple, very easy. This is all normal cases. But in exceptional cases, so exceptional cases are where government will notify. We'll see when the supplier is a farmer. Okay. So in that case, they say we cannot put the supplier under burden when the supplier is a small unregistered person. So then we say that the supplier is not registered, the supplier is a farmer, agriculturist. So then in that case, the supplier, we cannot tell him and put burden and liability on him. The recipient is a big player. Recipient is a company. They are already registered under GST. We'll tell them you are giving, then you pay the GST. So here the recipient is liable to pay GST to government. Okay, so very simple. The recipient will pay. I'll tell also, they will have to pay the tax directly to the government. If they don't pay, your penalty will be levied on recipient. That is your reverse charge. I will explain it with the help of an example when I come to it. So section number 9, subsection 1, we are done. That what is the rate of tax. Then we saw the goods on which GST will not be applicable. It will be applicable from a notified date. Then comes RCM, where government, you will see a schedule, and in that schedule certain goods on which RCM will be applicable, services on which RCM will be applicable. When RCM is applicable on the transaction, recipient will go and pay the tax or supplier. Always it is reverse, right? It is something opposite that is happening. The recipient has to go and pay the tax to the government. Okay, so let me explain. And your subsection 4 is very simple, that when the unregistered person is giving a services to a registered person, so RCM will be applicable. I'll explain with the help of example where the concept will be perfectly clear and engraved in your mind. Okay, there you will never have a doubt again. So what happens here? When we go to McDonald's, okay, now I'm taking an example of McDonald's. You go, supplier of goods or service. Who is the supplier of goods and service? McD. So McD gives you the goods, and we pay in the invoice, we pay the price along with the GST amount. When you join any classes, you pay along with the GST. Then the classes will have to collect the GST and go. So then the supplier of goods and services, whenever you buy something online, the supplier of it will go to the government and pay the GST amount. Simple. So they collect it from the receiver, but to pay to the government the responsibilities of supplier. This is a normal GST process called as forward charge. What it is called? Sir, forward charge. Excellent, sir. Understood the concept. Now reverse charge, understand, and you will also understand the concept perfectly. Now imagine if the supplier is an agriculturist, okay, a small player, or unregistered person. I could call him as a small player. He is a supplier of the goods, and the recipient is a company. Reliance Industries is a company. Okay. So now what is happening is, pay attention. The supplier, let's say, could be a carpenter. I'm talking about carpenter, interior designer, painter, any kind of a small player. He gives the service or goods to the recipient. Recipient could be a big registered company. Okay. In that case, the government is saying that don't pay him along with the GST, because then he will not come and pay to the government because he's not registered and he's too small. He doesn't even have proper manpower, computerized, nothing. So just give him the value of whatever it is, and GST you pay directly to the government. So what was the logic of this? The government also said that government can decide at which point of time they will be able to correct revenue more appropriately. So in both the cases, receiver is paying the GST, but one in forward charge is paying it to the supplier. Here it is paying directly to the government. So this is good. Okay. So this is what happens. In this, the receiver, in forward charge, the receiver pays along with the GST. Here they makes without payment of, the receiver pays the amount without GST to the supplier, and he has to deposit the GST amount directly to the government. Simple. Now we come to 9 subsection 5, e-commerce operators. So what is the rule of e-commerce operators? Is very, very simple. Now pay attention to this, that e-commerce operator, okay, shall be paid by the e-commerce operator as if the services were supplied through it. The government may, on recommendation of this, specify certain categories on intrastate where the amount of which will be paid by the e-commerce operator, as if the services are supplied through it, and all the provisions of it will be as if he is the supplier of this thing. Okay, let's take an example. Now, give me an example of an e-commerce operator of services. E-commerce operator of services. Okay, I'll give you an example. Is Urban Clap. I believe you must be knowing it. Urban Clap. Okay, Urban Company, Rapido, Uber, Ola, like that. Okay, so we are talking of Urban Clap. Or if I talk about Make My Trip. Okay, so these are all online aggregators. What do? Do they really give you the view? Are they employed by them? No. What happens is they are aggregators. It is possible that the real supplier of service, supplier is someone else. For example, if I go to Make My Trip and I book a stay in a hotel, I book a stay in the hotel. So supplier might be, I have booked in Taj hotel. Okay, I booked here. So supplier is this. I have just booked through them. So they are just giving me a aggregating services where I can. Your best example could also mean your food delivery app, Zomato. Okay, Zomato, your Swiggy. What happens? The restaurant is something else. They are just providing you a service of arranging and all this facility of all these options are there and you can choose. So it's just a booking app, right? And where the recipient is here. So what happens is the recipient normally, whenever you take as a customer only, you pay 100 and you also pay 18 rupees as GST. So GST is collected by the e-commerce operator. GST is collected through our bill. So whenever we make a payment through this, we pay along with GST. So then what government is saying that, listen, we will make them deemed suppliers. What will we make them? Deemed supplier. So if they are a deemed supplier, then obviously they only have to deposit. The GST to the department. So it is the liability. So who is liable? E-commerce operator is liable to pay the GST to the government. Clear till here? So whenever you make a payment through an e-commerce operator, the e-commerce operator collects the GST. So they are deemed suppliers as if it is supplied through them and they have to pay the GST to the government. Sir, understood? Very, very simple. Now, one more point. That further, if they are saying that what if it is related to Amazon, okay, Amazon, some online foreign e-commerce operator. So in that case, they are saying that, listen, if you are an online e-commerce operator and you are, let's say, giving an example of Amazon, could be multiple other e-commerce brands. What happened is they will tell them, listen, you need to be, what if they say, I don't have any presence in India? They say, so yeah, we are coming to a category of a foreign guy. So first, this part is clear that the government may ask that the e-commerce operator as if it is supplied through them, and all the provision of GST will apply to them as if they are the suppliers. And they are saying that if the e-commerce operator does not have a physical presence, maybe Amazon might say, I don't have a physical presence. So they say, then whoever you're operating through in India, they will be liable. Otherwise, you do not have a representative, then you will have to appoint someone in the taxable territory to pay the GST. Because see, if you are making the e-commerce operator liable, then they need to be present here to do all the filing. So they are saying that if you don't have, then create an agent here to make the payments. Clear? Okay, that is it. Now we are looking at the categories which are there. For, remember I told you that there are some categories of goods and services on which it will be applicable on recipient, where RCM will be applicable. So this is where RCM will be applicable for goods, supplies of goods under RCM, and one category we have where supplies are, these supplies will be made in RCM. So let's see. So logic is very simple. I don't think you need to read or learn anything. Understand that if a farmer is giving goods, so let's say a farmer, they are calling them as agriculturist. Okay, what is it? There is a farmer and he has a big to a big hotels. Okay, so let's say ITC hotel. So ITC require, for making they have restaurants, so they source the goods. So here you have the farmer is the supplier, and this is a registered person who is a recipient. Now you tell me, under GST law, who we should make liable to pay the GST to the government directly? Will we tell the farmer to get registered, collect the GST, pay? We don't want to do and harass agriculturist at all. So whenever they are giving services to a registered entity, we are telling that you just pay them the value of the goods, and GST you pay directly to government. To government you pay the GST directly. Very simple logic and very obvious logic. We tell the companies that don't pay these small people the GST amount, then they will not come and pay us the GST. Might as well pay us directly the GST amount. This is called as reverse charge mechanism. So wherever you see RCM, the recipient will be a registered person. So he is already registered, he can directly pay, he has all the systems in place, rather than telling everyone who are small players to get registered. So you see agriculturist is the supplier. Who is the supplier? Agriculturist. Who is the supplier? Agriculturist. And who we are telling, in the recipient is a registered person. Everywhere the recipient is a registered person. Here also not agriculture, but dealing in the primary sector, like making silk yarn. Okay, agriculturist again. So in all these cases, they are the suppliers, and this is the recipient of goods. So this will say this recipient is liable to pay GST. Liable to pay GST directly to. Concept clear? Yes or no? Very simple, nothing. And only last one is there. We are saying a lottery distributor. So whether government is a supplier, okay, government is a supplier and lottery distributing agent is there. So they will say that the lottery distributing agent will pay GST to government, that is department, directly. Okay, so simple. Whatever government also runs lotteries, they have they have state run lotteries are there. We will see when we come to that. So they give it to the agents buy and then they distribute it. So they are called as lottery distributors. So the lottery distributors pay the value of the lottery to them. They don't collect the GST. They don't pay the GST to the government. They will pay it directly to GST department. In government also there are different bodies. So they are saying don't give it to the government, give it directly to GST department. Simple like that. If you see the same logic, now this you will see for, now you will see the same thing for recipient for services. Okay, what is the logic? Whenever the recipient is a registered body or a business body, we will tell that, listen, you're a big guy, I already registered, you please pay the GST directly to government instead of a good transport agency when they are a supplier. So when GTA is a advocate is there, tribunals are there, sponsorship services, director. Let's take an example, okay, you will understand. So all these are suppliers. All these we believe are small players. What do we believe they are? Small players. Like a good transport agency, someone who comes and carries the tempo driver. So why company, if they're taking the services of, let's say, a tempo driver directly, so then he's a GTA, right? He's a goods transport agency. So why pay him the GST and expect a tempo driver to pay to the government? The company can directly pay the GST amount to the government. Okay. So let's take few examples. I told you GTA and all those are there. Now loan recovery agent. So what happens is, you tell me logically, okay, what will happen? A bank, okay, a bank hires a recovery agent. So who is the supplier of recovery services? So this becomes the supplier, and the bank becomes the recipient. So what they are telling, that listen, this recovery agent services, agency services are there to a bank, to a body. So they are saying that please pay the supplier whatever amount you want, pay him the value. The GST amount the bank will pay directly to the government. Similarly, if you go to see, an artist is there, okay. Now an artist giving his is a supplier of services to a big music company like MTV, Coke Studio, or you could say T Series, etc. Okay. So now supplier of services is the singer, the artist, and on the other side, the recipient is a massive music body. So they tell the music body that don't pay this guy the GST, you pay him the value whatever it is there. GST you pay me directly. Similar logic you go, as an advocate is there. Now advocates are, exempted through a separate notification only. Okay, let's talk about sponsorship services. Now in Adidas is a company. Okay, we are talking of Adidas is a company. So this is a company. They are obviously a registered person under GST. Now maybe Ranveer Singh is the supplier of sponsorship services. He's doing the brand ambassador, he's doing the marketing, the branding for this company. So he's giving them his services. But government is saying that logically, right? Why should we pay him and then expect this artist, this sponsor, this agent to go and pay to the government? Government is saying you're a big company, yaar. You directly pay to the GST amount to the government. Okay, so like this, if you read, you will come to know. Even if I take one last example, director. Now you have independent director giving his services to a company. Now independent director is a service provider of his services, of his mind, etc., of his strategic opinions. And on the reverse is the company. So the company is a recipient, they should pay the GST amount directly and pay the director only the value of his charges. We don't have to pay him GST and expect an individual to come and pay the get registered and then pay. So that is why for procedural ease RCM was introduced. Concept clear? Yes or no? And that is it, how it is placed. Now we are done with section number 9, in depth and all 5 subsections. Have you understood this? Yes or no? I want in the chat box, have you understood this perfectly? Yes or no? Sir, is Amazon and Flipkart also e-commerce operators? Yes, Amazon and Flipkart are also e-commerce operators, but they are of goods. I'm talking of e-commerce operators which deal purely in services like Zomato, or you could say, Make My Trip is a perfect example there. Urban Clap is a perfect example there, right? So they are e-commerce operators, obviously, but they supply goods, right? We are talking of e-commerce supplier of services comes under 9.5. Great. Now we will be doing another most important repeatedly asked question, that is your section 10 and the sums as well. Okay, so section 10 comes as composition scheme. After I teach you, I guarantee you not a single question you will not be able to attempt. That will not happen. You will know all the provision, because obviously I'll be doing every single thing in it. Okay, every single thing. So just give me 2 minutes. You all can revise the provisions of composition scheme. I will be doing the sums. After this section number 10, you can throw away. You will know it perfectly. Subsection, sums, all the rules, all the small little titsy bitsy things that they ask in the exam, I'm going to perfect it for you. Okay, so just give me 2 minutes. I will have a water break and I will come back. Okay, so we will be starting. So 2 minutes. Till that, I want you to revise your entire section 10. In the next 20 minutes, this section is done for you. Okay. Am I audible and visible? This is a 5 marker question that they keep asking here and there every time. So let's start, okay? Now, hi. So we'll be starting with your section 10, which talks about composition scheme under GST. Now, composition levy is for small business players and small dealers. Now, when I say small means what? How do you define the word small? So, small basically means that their turnover, okay, is not exceeding 1.5 crores, okay, and the 75 lakhs for few states. So the thing is, the standard thing is that small dealers means 1.5 crores, or I could also call it as 150 lakhs. So these small dealers, like this guy, a small dealer, will have two options. So every single small dealer has two options. So what are the two options? Either he can go for the regular scheme, so small dealer can have two options. Either he goes for the regular scheme or he goes for the composition scheme. So what happens in the regular scheme? Simple. You pay your regular taxes and claim your ITCs. So whatever you pay the taxes, so you pay normal taxes, normal rate of tax. So whatever is the normal 18%, pay that and claim ITC. ITC is what? Tax paid earlier on purchases. So simple. So they give them two options, that whatever tax you have paid on your purchases, you can take a credit of it called as ITC and pay the normal rate of tax. So for example, if I have 18% tax to be paid and I have paid taxes, let's say at 6%. So the difference I have to pay to the government. Very simple. This is how the normal GST working is there. That what is the normal GST working? That I pay the normal rates of tax. I pay the normal rate of tax, and whatever taxes I have paid to the government, I can take a credit or set off of it. In composition scheme, what do they say? That don't, I'll give you an option. Now in this you have to maintain all records, maintain all invoices, maintain all purchase invoices. A proper accounting is to be done. If a small player is there, the cost of compliance will be more for that dealer than actually earning. So he will say that I am just paying money in complying only. I have to maintain all records, appoint an accountant, and then all those expenses of have an accounting software. Everything is such a big hassle and a cost. So the composition dealer has another option, second option, is that he has to pay tax at reduced rate. Directly government will tell him you just pay 1% of your turnover. Directly, whatever is your turnover, directly take it, pay 1%, finish it off. Such a great thing. And obviously, since you're paying at a lower rate, you cannot, no ITC available. Can be claimed. Common sense. Already benefit of lower taxes given to them. So that the earlier taxes, whatever he has paid, he has to pay for it. He cannot take a credit. That is a cost to him now. But the ultimate benefit will be here, 18% taxes just becoming 1% of turnover. So here he has to choose. Government doesn't force anyone that you have to go here and there. They tell him it's your option, go wherever you want. Clear till here? Is the concept clear? So in normal regime, you have to pay the normal rate of tax and you are allowed all the credits of your tax paid earlier. In composition scheme, you have to pay at reduced rates, really reduced rates, and obviously since you already got the benefit, you don't get any other benefit of claiming your taxes paid earlier. So it's your choice, choose what you want. Concept clear till here? Yes or no? Very simple. Okay. Now we are going to see the sections, and they had introduced section 2 subsection 2a also recently. Now coming to composition scheme. Now composition scheme, there are 5 subsections. 5 subsections, your job is done. Section 1 talks about the eligibility, who all are eligible. As I told you, 1.5 crores if your turnover is there in the preceding year, then in current year you are eligible to be a composition dealer. So in the last year, if my turnover was within the limit, then in this year I am eligible as a composition dealer and I can claim all the benefits of lower taxes in this year. Then they tell you when you are not eligible. Okay. So first is about eligibility. So if you are eligible for composition scheme, obviously you will go for it because the difference is really huge. 1% and 18%. So it's really huge. Non-eligibility, certain dealers like big dealers, so small dealers, this composition scheme is made. So if anyone is selling interstate, outside India, online service providers, they are not eligible for composition scheme. That we will see who are not eligible. Manufacturers, in certain cases they are disallowed. Then this was always, they used to talk from goods point of view, that a dealer of goods, a dealer of goods have this benefit. Then all the service providers said that you should also have a separate section for us. So earlier composition scheme was available only for persons dealing in goods. Service providers were not allowed. Then government brought through an amendment, a composition scheme for service providers, that is under section 10 subsection 2a. So what is this? It's a composition scheme. It's a composition scheme for service providers. Concept clear? Yes sir, understood, easy. Next. Section 10 subsection 3 talks that, see, the no benefit will be forever. If at all you've crossed the limits, then from the day you have crossed the limits, the option will lapse. So this is when your option will lapse. Okay, it's not, benefit is not going to be forever. And this is really good because this for service providers, very good step. Why only goods dealers of goods were getting the benefit. Okay, now moving forward is then the third one comes about disadvantages of composition scheme. Now let's talk about the disadvantages of composition scheme. Obviously there is, in my opinion, not very big disadvantages. You get no ITC, which is obvious because you're already benefited with a low rate of tax. So government has to put that listen, you're getting this benefit, so this you won't get. ITCs you will not get. Clear? And last one is, if anybody has falsely tried to take the benefit of composition scheme, then you have penal provision. So coming back to the point, eligibility, non-eligibility, small service providers, for small service providers composition scheme, when does the option lapse, disadvantages of composition scheme, and penal provision. That is it, 5 points. Clear till here? I want you to write down, note down everything, and wherever I tell you the key points, you have to note it down. Now first one, okay, is section number 10. Now your section 10, okay. Now section 10 is composition scheme. I've explained you the concept, very simple. Eligibility, sir, who is eligible? Obviously for dealers whose in the previous year does not exceed 1.5 crores may offer composition scheme. But obviously if you are up dot 1.5 crores, allowed or not allowed, this students normally miss, and this they ask in the exam. Someone is exact 1.5 crores. So obviously since you didn't exceed 1.5 crores, you don't have to pay composition scheme, under composition scheme. Now for some different categories, different rates are there, so that you have to learn. Now pay attention to this. I have simplified it. Okay. Now for some states, exceptions are there, 75 lakhs, and for some, so aggregate turnover shall be 1.5 for special category states. So for these special category states where their income level is not that high, so they have kept Arunachal Pradesh, Tripura, Uttarakhand, Manipur, Mizoram, Nagaland, and however Assam and Jammu Kashmir, the total limit shall be 1.5 crores. So again, just note these three things. This is 75 lakhs for these 8 people. For 1, 2, 3, it is 1.5 crores. Concept clear? Again, what is the limit? For all states it is 1.5 crores. For these states it is only these 8 you have to remember is 75 lakhs, rest everyone. So except for these 8, everyone is 1.5 crores. So obviously they come under everyone only. Assam, Himachal and JK also is 1.5 crores only. So all you have to remember is the 8 ones, and everything else is 1.5 crores. This is the easiest way to remember. Now coming to the point is tax. What is the reduced rate of tax? Okay, what is the reduced rate of tax? Very simple. That the eligible person percentage of turnover. So directly whatever is the turnover, they have to go and pay on that. So manufacturer will pay 1% of the turnover of the state and finish it off. So whatever is his turnover, he has to pay. Now turnovers are of taxable or non-taxable. So when you go to the definition of turnover, turnover includes all taxable and non-taxable. So that is also a disadvantage only, that you have to see that if I'm selling taxable goods, I'm selling non-taxable goods, government is saying, listen, 18% tax is directly reduced to 1%. So you have to pay 1% of turnover directly of, so again, of turnover. And when you go to see the turnover, it includes taxable as well as non-taxable, right? Turnover, sales. So obviously you want the benefit or you don't want, you calculate. It will still come to be beneficial only. And in restaurant, 5% of the turnover. So turnover includes taxable and non-taxable categories. Have to take the combined turnover, because when you go to see the definition of turnover is given under section 2 subsection 6. Turnover definition they have seen, which I'll take you through in sometimes. TIE, all taxable, all taxable exports, interstate supplies, okay, and exempt supplies, all of them has to be added. So turnover literally means turnover. Then we are not seeing taxable or non-taxable. Only one category has been given that benefit of 1% of taxable supplies only. Of taxable supplies, that is dealers who are mixed suppliers, means they are dealing in, they are manufacturers also and they are others also. So they are having some minor level of service, majority goods, or who are dealers. Maybe it could be a dealer also, not necessarily manufacturer. So manufacturer pays 1%, since they are big players, they can pay. Restaurant pay 5% of the total turnover, and obviously for them, there's nothing like exempt. Restaurant will have almost all the taxable goods only. And the third one is only dealers where other than manufacturers, they will pay 1% of the taxable only, because they are smaller category people, right? Manufacturers have been asked to pay turnover. These people have been asked to pay only of taxable supply. So this is important. Okay. Then one point they have said that threshold limits for mixed suppliers. Now, normally when this thing was devised, when this entire composition scheme was only for goods, then imagine if I'm selling an AC, only AC, I'm selling only AC. Now that with that installation service used to come, with that minor level servicing used to come. So the service component was very less. It was always incidental to the goods. So government said, okay, fine. If you can still be eligible for composition scheme if the service element is very minuscule or very small. The service can be supplied by composition dealers up to, so they've given an upper limit of how much service you can give, max 10% of the turnover or 5 lakh rupees, whichever is higher. So you will see that 5 lakh rupees or 10% of your turnover can max be service, can be max service that you can give. So if I am giving 20% services, my turnover consists of sales of services, I am eligible under composition scheme. So earlier, before the amendment of section 10(2)(a), what happened is they said clearly one line that if you are giving services, you are disallowed. Okay, so if your services that you are supplying are exceeding 10%, or 5 lakh rupees, whichever is higher, so whichever is the higher of these two, if you exceed that limit, you should get disallowed under GST. So many of the business players who are mixed goods and services, they were disallowed. So then they said, let's make a separate category for pure service providers also. Okay, so then we see 10(2) who are not eligible. There is a simple little list that you need to see. Section 10(2) who are not eligible, or supplier of services are disallowed, except who are giving minuscule services, as we saw 10% of sales or 5 lakh rupees, whichever is higher, that is the upper limit of service that they can give. Taxable, non-taxable, so basically who are not eligible under composition scheme, if you are purely giving non-taxable goods, you will not come here. If you are giving interstate supplies, you won't come here. If you are e-commerce operator, you won't come here. If you are manufacturer of any notified goods, and government has then notified ice cream, pan masala, flying bricks, now these are all amendment related things that they had added. So these manufacturers are disallowed to opt for composition scheme. Okay. Now remember one thing, that a composition dealer cannot sell sell interstate. Okay, you will see that in ineligibility, what they said, who cannot sell if you are selling interstate goods. So then you are ineligible under composition scheme. But purchase can be done. So purchase can be done. Purchasing, na, I can't sell interstate. Purchase interstate is allowed. And all or none rule. Okay, so very, very important. They have asked this for 5 marks also in the exam. That if, okay, I am in, let's say, Maharashtra. I am in one state only. I am in one state, okay, one state, and I have two GSTN numbers, It is possible for my own business vertical, I might have a separate GSTN number. For example, I am in service of CS classes. I could also be in service of CA classes. Now, for this, I might have a different partner level. For here, I might have different collaborators, different faculties having business. So, it is in Maharashtra only, and they are all under one brand name only, ABC Tutorials. ABC Tutorials. So, what is happening is, the classes is having two GSTN number, okay, because their business vertical is different, but since it's under one brand name, it will have one PAN. It will have one PAN number and two GSTN number. So composition scheme, it cannot be that they will offer the normal scheme and they will offer the composition scheme. Either all go for composition scheme or none go for composition scheme. So it is PAN based. What is it? PAN based. So whichever is the PAN, you will come to know that this is the name of the PAN holder. He will decide whether composition scheme or no. If he says composition scheme, then everyone, whoever has GSTN numbers with that PAN will have to be opting for composition scheme. Now this is a very welcome gift for all the small service providers. If in the preceding year they do not exceed 50 lakh rupees. Now what is the upper limit for service providers? It is 50 lakh rupees. Okay. 50 lakh rupees. Okay. Now, they can opt if it is not exceeding. So, 50 lakhs is also eligible. If it is there, then they will offer composition. What is the rate for them? Rate prescribed is 6%, that is 3% CGST and 3% SGST. Like how we had seen the rates above for goods, 1%, etc. Here the rate is 6%, 3% max CGST and SGST. This is the rate that they have to pay of their turnover. Who are not allowed is exactly same. If you are giving exempt services, interstate e-commerce operators, you are a casual taxable person. This is a negative list who cannot offer composition scheme. When does the option lapse? Whenever you exceed the limit on that day, the option will lapse. From the next day, you have to pay regular taxes. Disadvantages, obviously, you cannot collect tax from the customer, neither can you claim credit. You have to pay it from your pocket. Now very important is, if they cannot issue taxable invoice, like how in GST they issue taxable invoice, a composition dealer cannot put instead on his invoice and everywhere on his door, etc. He has to say that he is a composition dealer. He can't take separate tax from you. Okay, whatever he gets the value from that only he has to pay the tax. Separate taxable invoice he cannot issue. So what will he issue? For them there is a separate word called as a bill of supply. Bill of supply will be given. It's like for exempt services where only value is given, tax component is not mentioned, right? So a composition dealer cannot issue a taxable invoice. They will give a bill of supply, and then you have the penal provision. That is it. We've covered all the parts of composition scheme. Okay. Then further, if you go to see some things, is that, see, the definition of aggregate turnover. This is given under your section 2, subsection 6, where you have to remember TIEE. What is the keyword? TIEE. That all taxable supplies in aggregate, right? Total turnover. So taxable, interstate, exempt and export, all will be added, but excludes the GST amount. Common sense. So if I have purchased, if I've sold at 1 lakh plus GST, so the amount turnover will only be 1 lakh. I don't have to add the tax component. Common sense. Okay. Then they are saying that when compensation scheme is not allowed, the rule 5 is important. As I told you, interstate, e-commerce operator, one special category they've always added, casual taxable person and non-resident taxable person. So non-resident and casual taxable person will not be allowed. What it is, it will come when we do those sections. And composition dealer has to always mention that he's a composition dealer. He cannot charge tax on his supplies. Even on his sign board and notice board, he has to put it. Right? With this, we've covered the entire provisions of composition scheme. And just one thing is the forms, GST form. Now from here, this is for the old dealers, like when 2017 Act was being passed. So we don't need to remember this. It starts from CMP 02. So this is the, when you're wanting to opt for composition scheme in any year, you will choose this. This is when you have to give details of your purchases, how much you have done. This is when you want to withdraw from the scheme, and then all this is related to penalty related, right? When you contravene, then you get a show cause notice and then an order will be passed. And most important is your CMP 08. Mark it as important. So now when you have to pay the tax, right? It is the composition scheme challan. It is the composition scheme challan. So due date for filing, you have to pay the tax, right? So a composition dealer is required to quarterly file, okay, inform the return in GST CMP 08. So this is an important form that you have to remember. In this, he makes the payment. It is a statement of payment of self-assessed tax, and he makes the payment quarterly basis. So moment that, and it is again within 18 days from the end of the month succeeding the quarter. So how many quarters are there? 4 quarters. So this is quarter 1, 2, 3, 4. Moment this month gets over, by 18th of the month following the quarter. Month following the quarter, this he has to go and make the payment, and he will make the payment in CMP 08. Concept clear? And that is it. We've completed the entire part of composition scheme as well. Thank you. Now we look at one part called as exemptions. Now exemptions under GST, okay, it means it's under section 11. It is under section 11. Okay, it is under section 11. Now general exemption is applicable to all. General exemption on salt can be given, on COVID mask can be given. Okay. Exceptionals in each case means for an individual perspective also they can give a specific exemption for a particular transaction. For example, for the army certain goods are being imported, exemption can be given, or for a public hospital transaction. So it is transaction based. Okay. So general exemption applies to all dealers. Okay. And this is only for a specific person or a specific transaction, not for all. Then comes the exemption could be conditional or absolute, means you get an exemption, or you could tell conditional exemption could be there. Like for example, if you have only if the tariff rate is up to 1000 rupees, then only exemption is there. But if you are charging more than 1000, the exemption will not be given. This is a conditional exemption. Then comes with certain types of goods which are also important to know the concept. Nil rated goods. Then comes exempted goods, 0 rated and non-GST goods. Very, very important to know the difference, because sometimes they ask in the exam. Okay. So first is 0 rated goods. 0 rated are the best. They are export goods. So whenever someone says 0 rated, it means export supply. So you have exported the goods abroad, SEZ, etc. So here 0 tax is taken, but the ITCs can be claimed. But ITC can be claimed. So credits of all your purchases will be given. Nil rated means what? They are declared at nil rate. Okay, so in the table only, when you go and see the tariff table chart, zero rate will be given. Sometimes if the rate is 18% in the chart, government can issue an exemption notification and exempt it whenever they want. They can take back the exemption also. Non GST goods are those goods on which GST is not applicable only. Clear? And then the GST exemption list are there. The following exemption list you should know: charitable, religious, health, educational, agricultural, performance by artists. These 12. I take you through. I'll tell you which is. See, we understand charitable institutions will be exempt. Okay, if they are registered under the Income Tax Act and they've got the certificate. Here, someone running a old age home. Okay, for people 60 years or more. So wherever certain numbers are there, that I will take you through. Okay, consideration up to 25,000 per month per member are exempt. So for example, for old age home also, the trust can charge the people, the families. So if the consideration is up to 25,000 per month per member, it is exempt from GST. Religious entities also we know. In religious entities, you have to remember that a room rented for less than 1,000 per day. So if for religious purpose also you are taking the room, then thresholds have been given. Okay, GST is exempt for religious purpose and rooms are rented for less than 1,000 per day. If a community hall is there, it is less than 10,000 per day. Shop is there or business space is given for religious purpose, like maybe outside a particular religious place, it is being given, and then the rent is less than 10,000. In all these cases, GST is exempt. Healthcare, ICU, hospital, ambulance, wherever threshold is there, I'll tell you. So in non-ICU rooms exceeding 5,000 per day is taxable. Usually 5% of ITC is there. So non-ICU rooms, maybe in general ward, if the per day room rent is 5,000, exceeding 5,000 rupees, then GST is applicable on the room rent. If it is less than 5,000 rupees, it is exempt. Education, obviously services provided by a educational is exempt. Okay, like your university, etc. It is there. For private organizations, GST is applicable. Okay, it should be authorized. So a boarding school where they give you hostel facility, etc. is exempt. Your degree courses is exempt. University where you have registered for CS, etc. will be exempt. Coaching is obviously taxable. Your personality development institutes are taxable. Catering, okay, for educational institutions which are exempt, they are exempt. Like a university giving food will be exempt. IIM long duration programs, obviously it should be taxable. Renting of immovable property for to higher secondary schools is taxable. Okay. Agriculture, everything will be exempt. Okay. Performance by an artist, very very important. Let's see that services by an artist by performing any kind of folk art are exempt if the consideration received by them is 1,50,000 rupees per performance. So if an artist is doing a kind of a theater, dance, anything, classical music, etc., and they're getting 1,50,000 per show, it is exempt. Okay, that threshold you need to know. Sport services, all empire, referee, etc., are all exempt. Commentator are also services such as sports commentators are taxable, not covered under the exemption. Here, the main players are covered. Immovable property is all exempt under GST if it is given rented to a unregistered person. So basically, my immovable property, if I have given it to an individual, it is exempt. But if I have given it to a company, business, it is taxable. Then again, RWA, that is your clubhouses. So if your company is giving swimming pool, etc. services and are charging maintenance of exceeding 7,000 per month per member, and collectively in a year the society is getting more than 20 lakh rupees, then they have to pay GST on it. So normally if you go to see all these societies will have 10,000 per month maintenance, 15,000 per month maintenance. So it is above 7,50,000. And collectively when we see that there are more total contribution given and maintenance is coming as 20 lakh rupees, it is exceeding that GST is applicable. Let's take it reverse. If maintenance is 5,000 rupees, it is exempt. Okay, even if the threshold is going 20 more than 20 lakhs, more people, but we have, two things are there. It should be 77,500 more maintenance amount should be rupees 7,500 more than that per month per member, and collectively when the money is collected more than this amount and collectively are getting in the pool more than 20 lakh rupees, then you have to get registered. Transport is all well government related is there, it is exempt. I'm just taking you through what can come in the exam. Okay, so that is it. The section 11 also I have covered. Okay, section 11 also I have covered. Now section 12 onwards. Now that is time and value of supply. Very important. This I will cover tomorrow onwards. So tomorrow I will be covering your time and value of supply. Clear? So that is it for today. Your section 9, 10 and 11 I have covered for you. Thank you guys. Do like the video and I will see you tomorrow again to cover this. Those topic which is there for tomorrow is a heavy topic. So all 12, 13, 14, 15 I have to cover all together. Or at least 12, 13, 14 I have to cover all in one go. So that is important. So I will see you all tomorrow around the same time and cover that section also which comes in the examination. Thank you guys.